Hello, everybody. Welcome to today's webinar. Really looking forward to having you all join here. We'll give it about 30 seconds as everybody begins to join, coming from their lunch breaks, I'm sure. I am calling out of the lovely, warm Miami, Florida right now. Christian, where are you joining us from?
I'm joining from New York City. Not quite as warm, but not that cold anymore either.
Certainly not as warm, but just as beautiful, no doubt about it. As you can see on the screen, everyone, we're starting with headcount. Headcount modeling is notoriously difficult. There's a lot of struggles with it, but luckily we have Christian here with us to give us an overview of it. Who are we? Why should you even be listening to us at all? Well, I'm Kirk. I'm the Director of Strategic Finance here at Drivetrain. We are an FP&A software, strategic finance software that helps you forecast more accurately, gets you to the places that you want to be. It's essentially a replacement for the traditional sort of lacking Excel software that can become a little bit buggy sometimes. But with me, I have Christian Wattig. Christian is an FP&A expert with 14 years of experience in multinational corporations, P&G, Unilever, to list a few, but also some high-growth tech startups, Squarespace. After earning his MBA from NYU Stern, he helped take Squarespace public. Now an entrepreneur, Christian directs his the FP&A certificate program at Wharton and runs his firm FP&A Prep, offering corporate training, online programs, and sharing insights through LinkedIn newsletters and his FP&A Tuesday series. Christian, super excited to have you here.
I'm excited to be here as well. I'm looking forward to this.
It's going to be a lot of fun. Let's go over a little bit about what people will be learning in this session today. Number one, 8-step headcount forecasting methods with best practices. This will be the meat of today's session. Christian's going to be walking us through the steps. It's really insightful stuff. I've been doing headcount modeling for a long time, and I learned an immense amount when working with him on this presentation itself. Number two, let's tackle some real world challenges in workforce planning. We're really excited to go not only through the theory, but then also practically, how does this show up in models or in software such as Drivetrain? And then, of course, reach out. We always want to work with you guys on consultations, any workforce planning techniques, and you'll be able to see any sort of email contacts on the right side in the chat. And so if you would like to reach out to us, we'd be more than happy to do that. Let's start here quickly with a poll. We've got 2 poll questions for you. Where do you currently manage your headcount planning? And what is your biggest challenge with headcount planning? We got a couple answers here for you: Excel/Google Sheets, ERPs, HRIS tools, FP&A platforms such as Drivetrain, right? Or maybe you don't have a formal process. Maybe right now all of that's in flux, right? We want to get a feel for this. This will help us direct a little bit about the conversation. Keep that up for about 30 seconds or so. But before we dive into today's topic, we all know that headcount is critical given staffing is 70% of expenses according to the Bureau of Labor and Statistics, as well as Human Capital Management Institute. But are there any nuances, Christian, that you could share in terms of at what stage a company should be ready for this or not?
Yeah, absolutely. So if you are very early stage, and especially if you have a short runway, anything below 6 months, even if you have less than a year of runway, probably detailed headcount forecasting isn't the top priority right now. Probably you're more focused on finding efficiencies and looking at cost-cutting measures. But for growth stage, for developed companies, headcount forecasting is extremely important, especially in these volatile times.
No doubt about it. Okay, so there is a time factor that matters based on when you're prepared to do headcount. Nevertheless, this is important for people to know whether you are that early stage or you're a bit more seasoned, everything we're going to be talking about today. I would love, Christian, if you could give us a bit of an overview at a high level of the 8 steps that we'll be walking through today.
Absolutely. So if we move on to the next slide, the first step, next slide, please. The first step is to compute the top-down target. Any headcount forecast needs to be grounded in your targets. You may already have those from the last budget process, but if not, they need to be there because the targets reflect the expectations of leadership, the board, the investors. And then in the next step, I highly recommend you build a top-down forecast. And this is something that you as the finance leader can do. We'll talk about exactly how to do that. But essentially, it's about looking at drivers. I highly recommend using a driver-based approach. There are a number of advantages. We'll talk about that in a moment. And then after you're done with building a top-down forecast, you go and get the bottom-up as well from the department heads. And there are a number of things to consider. We'll talk about those in detail. But I'd like to pause here for a moment and clarify a bit why we're recommending that you're doing a top-down forecast and a bottom-up. Because I often get that question. People ask, isn't a bottom-up enough? Those people are closer to the business. And that's true. But typically what happens is that your top-down forecast might be a bit conservative leaning, whereas your bottom-up forecast is more aggressive, right? Department heads, they share their headcount requests with a mindset of, okay, we want to get a lot done, so we need a lot of people. And where you can often find the golden middle is by comparing the two. And it's not just that you do, and that's our step 4 here actually. It's not just that you bring more realism in by having a conservative top down and a more aggressive leaning bottom up. It's also that if you do the top down the right way, then finance can actually add a lot of value even with the bottom up. Talk more about that later, but if you do the top down at the right level of detail, then you can use that to challenge the bottom up effectively and have a real impact on the business and help leaders make better decisions. The other question related to that I sometimes get is, which one should come first, right? Your top down or your bottom? Here we said step 2 is the top down, step 3 is the bottom up. That's how most companies do it. But I would like you to consider maybe also consider doing the bottom up first. And the reason is this. If you share your top down forecast broadly with the team before they start doing the bottom up, it could influence people, right? That people may think, oh, finance and leadership team thinks we can only hire 3 people. I think I'll need 5, but I'm not going to submit 5 because it's going to be cut anyway. So I'm just gonna match to the top down. I'm gonna submit 3, and I save myself a lot of discussions. We don't want that, right? We want people to actually share how many people they think they'll need in the next month, quarter, and year, because we need to have discussions around why that's the case, why it makes sense, how we can make trade-offs. And so, a company I used to work at, there we had this challenge, right? It's a bit on a culture perspective, but there we had the challenge that I had a strong feeling that the bottom-ups we're getting were highly influenced by the top-down. And so I said, look, in the next cycle, let's do it the other way around. Let's do the bottom-up first. But I got pushback, because the department heads were uncomfortable with that, because they thought, well, then we might submit a bottom-up that's completely disconnected from financial realities. They probably also were a bit concerned that it might look embarrassing for them. And so how we solved it in the end is we didn't give them the top-down first, but we gave them guardrails. We said, you can hire in this range. You have roughly this range in terms of money for hiring bonuses, etc. And that made the whole process a lot more realistic. So that's why it's so important to do a top-down and a bottom-up. 2 different teams do that, right? The finance team does the top down, the business team, the department heads do the bottom up, and then you use that to compare.
I love this point, Kristen, that you made here, because every team, of course, has their own incentives. And so when they do their modeling or their assumptions, right, they're going to have different inputs that go into them. So the idea of comparing 2 separate, completely set of assumptions, in this case, a top down and a bottom up from 2 separate teams or two different owners, one versus multiple. I love the idea of comparing those together as sort of our scenarios. And so for me, this was a huge takeaway in and of itself.
Thank you. Yeah. And then when you're done with that, step 5, factor in attrition, backfill, new hires, ramp up times. I actually recommend to do this completely as a separate step from the bottom up and the top down, because if you're trying to do everything at the same time, it can get complicated quickly and you have to redo a lot of work when there are changes. So I would definitely recommend you do that as a separate step. And then it's time to create scenarios. Don't skip that step, right? I often see that people, spend a lot of time on the headcount forecast, but then they just file it, move forward with the next thing. But the reality is that it's rare. I have never seen a case where the headcount forecast gets delivered exactly the way it was planned, right? Because usually what I've seen is that it does take longer to hire some key positions than anybody has expected. And that's why we create different scenarios, because then if you have a scenario where headcounts are delayed, then the leadership team can have a conversation already now about, okay, in case that happens, how do we deal with it, right? Are there any strategic priorities, any projects, any new launches that would have to be pushed back in that case, or do we have enough slack in the existing workforce that we would be able to handle a certain amount? Then it's interesting what that amount might be that we would be able to handle if the hires are delayed. And then also in the other scenario, if the hiring market is easier than expected, and also if our strategies seem to be working and we want to put fuel on the fire and we want to hire even more people than in our baseline scenario, and we're able to do that, what would that look like in terms of financials, and how does that tie back to the budget and the targets? And that's why I recommend 3 scenarios, and we'll talk about how to differentiate with those between those 3 later on. And then step 7, once you're done with this, you have your 3 scenarios, you tie them back to your budget, to your margin goals, to do that reality check, that feasibility check, which then also feeds into trade-off discussions. And then lastly, step 8 is monthly tracking and reforecasting. Extremely important. Some companies do it quarterly. I'm a fan of monthly tracking and reforecasting, simply because then forecasting is kind of part of the existing monthly cycle, and it's more top of mind for people. And it's less of an out of the ordinary additional lift than if you do a big exercise just quarterly. So that's the forecast in a nutshell.
No, that's really good. Thank you so much, Christian. Of course, we'll be taking these one by one. Starting with step 1, back at the top-down targets. This is one thing we see a lot in drivetrain in terms of how we want to do it. These 3 that you're seeing here are actually the 3 most common ways we actually see it. A lot of the time, it can be a % of revenue budget. This is pretty common. Another common one is % change over the previous year's budget, so a simple 5 or 10% increase. And then a lot of the time, it's just based on investor expectations. You sort of start with the goal based on the investor expectations, and then you figure out what you need to do in order to get to that goal later. Now, this would be more generic, but something that might be a bit more SaaS specific would look something a little bit more. Oh, go ahead.
Sorry, but before you go there, I just wanted to add one more thing,
Please do.
Which is the % change over previous year's budget. You have to be very careful with that, because if that's your only way of setting target, people will realize that over time, and then you won't get realistic budget inputs. People are people, and if they know that the target they have to achieve is 10% higher than the budget, or they have to do what they have to do with 10% less in headcount than what they submit in the budget, then they'll submit their budget accordingly, right? They artificially increase it because they know my headcount target will be cut by 10%, and you don't want that, right? So I think that the third point on the slide here, that's really key. You want to decouple your target process from your budgeting process and say, well, targets, they're set based on external inputs and specifically investor expectations.
Yeah, I couldn't agree more. There's definitely incentivization pieces to each of these, right? If it's just a previous year change or a slap on of 5, 10%, that doesn't really provoke innovative thoughts when it comes to actually having cost constraints. Where does the money need to go to have the biggest impact on the business? So, like I mentioned, these are pretty generic, right? For something that might be a bit more B2B SaaS specific, these are some of the more common ones that we've seen. A lot of the times, I see people start with board committed KPIs. This is sort of what we were talking about before, starting at the end goal. This is the NRR I want to have, the GR I want to have, and then making the assumptions fit the target goal. If you already know where you need to get to, you probably know how you need to get there, or at least what your sales reps need to achieve, what you need to achieve per month. Those sorts of things can be quite nice. Computing downstream targets, right? This might be obviously those fillers, new ARR, expansion, any churn. This piece has also been incredibly helpful and common when we're thinking about setting those top-down targets as well. And then lastly, like how do we think about non-revenue teams? Goes a little bit back to what we were seeing on the previous slide. Most of the time, they'll do a percent of revenue budget or some sort of blanket increase over last year, like what we were looking at before. Obviously, be careful with those, like Christian was mentioning, but these would be two of the most common. The last one would be every team obviously has some sort of driver-based methodology that they could apply. Every team has their own metrics, every team has their own outputs. If we can use those drivers, that is usually ideal because then we've got an incentive that matches the forecast that we want. So I'll pause there, Christian. Any comments on this one before we move on?
Thank you. You gave a complete overview here. Thanks.
No problems. So one thing to accompany all of these, we have some good resources for you guys. Those will show up as links in the chat here. We have this ebook on SaaS metric based planning, which is quite nice. And then we also have the template, so you can spend some time actually in the model, see how we actually can get to those metrics that we want to get to, and what sort of inputs we need to achieve those. But without further ado, feel free to take a look at those in your own time. Let's jump on to step two here, Christian. What are your thoughts on creating a top-down forecast for identifying key headcount drivers?
Yeah, so if you move on to the next point here, there are a number of different ways you can look at this, and you should really look at all of them. So the first one is revenue driven. This is specifically useful for growth stage established companies, maybe less so for early stage startups. And here you can take a look at overall salary and benefits as a percent of revenue. This is a very high level approach of looking at it, and I would never do this in isolation and use this as the only way to do even a top-down forecast. But it is useful, so you're not being you don't fall in the trap of not seeing the forest for the trees, right? If you're too into the weeds, into the details, you may be surprised that your salary and benefits as a percent of revenue changes, and that's actually something that investors look at frequently as well, because that's a way how they can benchmark and how they can compare your performance to other companies. So it's important to reflect that. When you look at sales, though, revenue-driven metrics can be extremely powerful, and you can look at the revenue per sales rep. The second way to look at headcount drivers is headcount-driven. And in this case, you want to separate between department metrics and organization metrics. Just to give you a few examples of what I mean with that, when you look at department-wise headcount ratios, you can look at, for example, for every product manager I have, I want to have 4 engineers. Because I know that product managers will come up with a certain number of features, and to hit our roadmap, we need 4 engineers who execute what the product manager comes up with. Or you could say that we want one QA engineer, one engineer that's focused on quality for every 3 developers, because you know that when the developers are launching new features, there might be bugs, right? And there needs to be enough people to make sure that the solution is robust and bugs get addressed. Another common department-wise ratio is the number of sales development reps per sales rep, right? And then when you look at organizational-wide headcount ratios, For example, HR is a common one. For example, you might say that we need one HR rep per 20 employees. So when we're scaling, we're growing fast, we have the right pace of hiring those support functions. Another thing to look at is span of control. So what I mean with that is, what does your organizational hierarchy look like? How many individual contributors do you have per manager? And as you're growing headcount, that may well change, right? And that's something that you definitely need to consider when you're doing headcount planning. This is something where you would work closely with HR together on that. Yeah, and then we have activity-driven headcount drivers. Those are applicable for all growth stages, all stages of companies. And that's where you look at, okay, how are operations doing? How are the number of customers growing? Are we planning to enter into any new channels? Or maybe we're planning a geographic expansion, we're launching in a new market. It's very important that you as the finance leader are close enough to the business that you have on your radar what's coming, what's changing in terms of activities, in terms of processing, in terms of operations, so that you factor that into your headcount forecast as well. And then lastly, we have efficiency improvements. So it's important not to forget that when you do your forecast planning. These days, efficiency improvement should be high on the priority list of any leader, right? In any department, in any function, because we do have tools like Drivetrain, like AI chatbots that can help you a lot in terms of efficiency improvements, in terms of making your life easier. So your headcount forecast should already include that. So to remove some slack and to make sure it's challenging, and that's already factored in.
Awesome. And when we think about sort of drivers, especially across these departments, when you look at this screen, I'm interested, are there ones that you've seen that have really stood out to stand sort of the test of time across the various businesses that you've worked with? Or is it one of those things where each of these, if used properly, can add some sort of value and you wouldn't take one over another? You would say this, an array of these can kind of help us.
That's a great question. So I would highly recommend that to begin with, if you haven't done a detailed driver-based forecast like that, try to look at as many metrics as possible to start with, because you might not yet know where the levers are, right? Which of those metrics have the biggest impact on the success of your company, which matter more, which matter less. And then it's important to apply an 80-20 principle. So we put another set of metrics here on the slide. We also have a longer list of metrics that we can share after. But once you have done that initial exercise of looking at all those metrics, looking at the historical data, focus on the 20% that have 80% of the impact on your business, and make sure you really understand those. So just to highlight a few examples here. On the sales side, you can look at the sales turnover rate. How long does it take you to close a lead? And that will have an impact on your sales team. On the customer success side, you can look at the productivity of each customer success manager by looking at how much revenue does each one handle, or book of business, by the way. So for those of you here who aren't familiar with the term, book of business is the totality of all won deals, the total contract value, irrespective of revenue treatment. Because when you take revenue per customer success manager, you might be influenced by accounting rules that distort reality a little bit. So book of business, the totality of your contract values that you have closed can also makes a lot of sense here. And then customer support, very important to keep those support functions in mind as well. Because what you don't want to happen is that you are focused too much on the teams that produce revenue, but then that headcount growth runs into a bottleneck, or the productivity runs into a bottleneck because customer support can't handle all the tickets that the new engineers created essentially. Yeah, and also what's really important here, what I want to emphasize is that these metrics that we have on the screen here and that I mentioned before aren't just fantastic to create your top-down forecast. They are also great to challenge the bottom-up forecasts by the business leaders later on.
That's great. Yeah, one thing I love about this slide as well is it nicely bifurcates sort of our, let's say, new ARR to our sort of expansion ARR. On the left side, sales, obviously, we're thinking about new customers, but to maintain those customers, to keep them around, a good customer success and customer support team, maybe perhaps one and the same, is vital. And they're going to have their finger on the pulse of every single customer, understanding where they are in terms of frustration rates and everything. So getting their feedback has been super valuable. I've seen to a lot of our customers as well. Here, next step on establishing the baselines for headcount drivers, I would love your thoughts, Christian, on each of these and how they play a part in sort of establishing that headcount forecast.
Yeah, so we talked about the drivers, and then you need to apply that to your baseline. The first step is looking at historical trends. That's straightforward. You're probably doing that already. Internal estimates, what I mean with that is you need to take a close look at your historical trends and your historical actuals, because you want to make sure you are adjusting for one-offs. So you're removing things that likely won't repeat. So for example, maybe you know that there was a very competitive hire that you made last year where you paid an exorbitant amount of sign-on bonus, and you know that there was an exception, and you know that that won't happen again. And so that's something then that you would adjust in your baseline salary and benefit figures. And external benchmarks is an often underutilized tool, but I would recommend that especially benchmarks can especially be helpful to get that outside perspective in and make sure that you have a way to sense check whether your internal estimates are reasonable. So, and in addition to that, those external benchmarks can be fantastic ammunition in your discussions or sometimes negotiations with department heads to address overly aggressive headcount requests.
No doubt. Yeah, that external benchmarking piece is one that we've spent a lot of time on here at Drivetrain. If you look in the chat, you should be getting a couple of links to our blog posts on benchmarking. We have a blog where we're constantly releasing input on modeling best practices, how tools are solving the FP&A problem. So definitely take a look at those. And then in terms of having sort of the scenario-based planning being brought in here, Christian, any thoughts on the best way to kind of start that process here?
Yeah, so once you have your headcount drivers, you have your baseline, you marry the two. And that's where, if you don't have a planning tool where you're probably going to be building a complex Excel model, because you take a table with your historical headcount, you need to decide, do you do that on the employee level, or do you do that at the role level, or maybe even at the team level? Depends on the complexity that you have. And then you project out from there by combining your baseline and your headcount drivers.
Awesome. Now we've got this note here on always take fully loaded cost. What do you mean by this when you say this?
Yeah, so this is a comprehensive list of really what we mean with fully loaded costs. It's not just salary and benefits. You also need to include payroll taxes, relocation charges, overages, training costs. I'm not saying that you need to create a detailed model for all of these. So that's very important because some of these will be very minor. But you need to make sure that you at least take the historical amounts of overages and office meals and training costs to make sure you have fully loaded costs going forward.
No doubt. And, we've been talking a lot very theoretically about these things, but as promised, we want to show you a little bit about how this can look in a tool. How can we actually go about this? So let me jump into when we're talking about Drivetrain and how we can actually handle all of these things in a tool. Here you can see a variety of pieces on this page. This would be the typical modeling template that we would give for headcount. It doesn't include everything. This would be more for a US-based piece, but you can see here the breakdown of the complexities of those fully loaded costs that Christian was talking about. When we're talking about 401k and severance pay, Social Security tax, Medicare tax, SUDA and FUTA, historically difficult things to calculate, especially in Excel when you've got your limits that you need to reach, these sorts of things. This is exactly what a tool is help planning for. So we're going to come back to this a little bit later, but the key piece to call out here is whether you're doing this at a department level, whether you're doing this at a department and a team, meaning at the actual headcount level, we want to be able to calculate these to the cent. If we can see it on the pay stub, we should be able to reproduce it in the forecast. And that's exactly what something like this is trying to address. We'll walk you through this a little bit later in a little bit more detail. But Christian, back to you in terms of how can we actually gather these bottom-up inputs from cross-functional teams?
Yeah, so again, if you don't have a planning tool like the one that Kirk just showed, you need to have very good templates because you want to make sure when you're getting the inputs back, you're making it as easy as possible for you to consolidate everything in Excel. Where I sometimes get asked, okay, how can I as the finance leader add value with the bottom-up process? And that's what we have in the middle on the slide here. Ask department heads to justify the headcount, ask challenging questions. Super, super important. And this is where your driver-based top-down that hopefully you did at the level of detail that we're recommending here. That's where that comes in extremely handy, because then you don't just say, oh, I think your estimate looks high. You can show that by opening up your spreadsheet and saying, look, I actually think that the ratio of SDR to sales leads is off. Here's why. And you can have a much more data-based discussion. And it's much easier for you to challenge based on data. And as a pro tip, ask department heads to provide a list of hires in order of priority and ask them to stack rank the roles, because then in the likely scenario often that the headcount requests are too high, you have a starting point, where you can start reducing without necessarily putting the major objectives of the departments at risk.
Without a doubt. So on step 4 here, validating the headcount request with your estimates. What do you mean by this from a validate perspective?
Yeah, so now that we have a top-down and a bottom-up, we compare the two to each other. We have a meeting. The first meeting I recommend is always learning. So you as the finance leader, sit down, try to learn as much as possible from your department heads about how they came up with the numbers, and don't challenge it yet, right? If you immediately come out swinging with, oh, your numbers look crazy high, that can create defensiveness, and you may honestly not be aware of certain realities that didn't make it into your top down. So first sit down, have them explain the reasoning behind it, and then you talk about the differences. And I wrote here that you should have a coaching approach to get deeper insights. What I mean with that is, rather than telling people what you think is off, ask questions. Ask questions. I specifically like the GROW framework for coaching. You can Google this if you haven't heard about it before. GROW stands for goal, reality, options, and what's next. So you ask first about, okay, what are they trying to achieve with that headcount? That's the goal. What's the reality in terms of why can't this be done with the existing headcount? What bottlenecks are we running into? What have we already tried in terms of achieving similar goals with the existing headcount? Because it might be the case that we haven't really tested yet whether we could do this with existing resources. And then options is where you brainstorm about, okay, if we can't make this happen, if we can't hire as quickly as you say, or if it doesn't work from a budget point of view, what are other options? What are trade-offs we could make? And then what's next is where you're making sure that you're very transparent about what will happen next in this process, how will it get justified, how will it get consolidated, etc. And then you align on a shared proposal. And I wrote here, if you can't align, use the requested figures as a base case and report your scenario separately. What I mean with that is, and this actually happened to me in the past. The headcount requests that we got were very high, and this, especially the CMO I was working with, had actually very reasonable, a very strong reasoning why they needed all that headcount. But we knew from looking at historical data that even if we have the budget, it would just be unrealistic to hire people that quickly. We just know that the recruiting team needed more time. And so the CMO insisted on that she needed that headcount and needed it quickly. And so in the end, what we said is, look, let's communicate the way you need the headcount to the recruiting team. Those will be the official targets. But at the same time, internally, just for financial sake, we use what we think is the realistic number. We use it to calculate the P&L, to roll up, but we won't share that publicly so we don't confuse department managers and recruiting leaders about the goal. So that's one way to approach this.
Beautiful. Yeah, you're talking about a lot of big concepts here, especially when it comes to collaboration. And then obviously some point of validation and reconciliation. A lot of the time you'll have these to be hired that you want to put into your forecast. But then when they're actually hired for, how do we do that mapping? I want to jump back into Drivetrain really quickly here. Christian, can you see this employee roster I have on my screen?
Yes.
Beautiful. So this is what we call lists in Drivetrain. It would store all of the employee information that you might see here and anything related to that expense. But like I mentioned, this has to be a combination of both my actual headcount and my to be hired. This leaves a problem. When I have my to be hired roles that I actually hire for, how do I ensure that mapping occurs? You'll see something here about this updating the list with new data. If I click into that really quickly, I get a list of the people who may or may not have filled an existing role. With Ava Martinez, for example, it's saying this is a new record. It's picked this up from our HRIS system, and it's asking, what should we do with this? Now, I could just accept this as a new line item, but perhaps I actually want to map to an existing record, in which case the to be hireds that I had in place, she may be replacing. If I click on one of them, for example, I see all the various different dimensions of Ava Martinez and the original role. Some of these were blank originally. Now they will be replaced by Ava Martinez's individual details. Now, this could be true for a variety of reasons. Perhaps a hire date was pushed back. Perhaps there's been an increase to their salary or a new title given to them. Regardless of the individual element or the attributes that have changed about that particular element, we want to be able to call each of these things out and make sure that they get mapped to the appropriate place. This feature here was made in response to our second biggest user, which was our HR teams, as well with the FP&A teams, where we want some sort of approval, we want some sort of mapping process built in here. This has allowed for that collaboration, because now teams that do come in here and want to make sure that the mapping is done properly, we can have the appropriate permissions such that each person sees what they need to see and approve what they need to approve, as well as submit any referrals or requests as well for headcount. So this is a nice feature that we have in Drivetrain that solved a lot of the issues. Of course, as we accept those, they'll get added to this list here as we go on. And then if I ever just want to add my own row as sort of a to be hired, I'm more than welcome to do that and can add whoever I like to in whatever teams and whatever salary. So I'll pause there again. Christian, we're going to jump back to you here. This is a little bit of an overview of the top line piece that we're going to be talking about. But here I want to talk about the attrition, backfill, new hire, any sort of ramp times when it comes to that from a theoretical perspective. Then we can take a look at it, how it looks modeled.
Yeah, absolutely. So as I mentioned before, do this at the very end. When you done your bottom up, you done your top down, you had a discussion, you have a base case that you aligned on, hopefully, between the department heads and finance. And then you sit down and you do the attrition, backfill, new hire, and ramp times. I'm saying do it as a separate step because this can be time consuming because you want to make sure you do it accurately. You want to make sure you do it based on historical data. You want to make sure that you can justify this decisions you made. And having to redo this multiple times, I speak from experience here, can be a bit frustrating. Again, if you don't have a cloud-based planning solution. Now, What's important here is that you don't forget about ramp times and that's often, something that people don't have in mind. So what I mean with ramp time is you hire the person. They are, my recruiter always like to say butts and seat, right? That's the key date when the hire is actually starting to work, but they won't deliver the full productivity yet. And that's, of course, especially relevant for sales. If you have to train your sales team first, you need to consider that. You need to consider that in your forecast. This won't affect your expenses, but it may have an impact on revenue, and it may have an impact on hiring plans for other functions, like customer support, for example, right? If you're scaling your sales team, it will take a while until they generate the kind of activity that warrants hiring more customer support people. So important to keep that in mind.
No doubt about it. Yeah, we've seen. We got one more pro tip here. Any comments you want to put on this one, there, Christian?
Yeah. So there's a lot to consider, right? And promotions, internal movement, and succession also important. These are sometimes hard to predict, right? So what I recommend there is just use historical data as an average, see how many people were promoted in the year before, and make some reasonable adjustments, but don't spend hours and hours on this. It can improve your forecast accuracy, so you shouldn't ignore it, but spend more of your time on attrition, backfill, and new hires and ramp time, because that's really what moves the needle.
No doubt about it. Yeah. So this attrition, backfill, new hire, these sort of ramp times, for the most part in Drivetrain, we've templatized this into what we've commonly known as the sales capacity plan, and in this case, by sales rep. So if I jump in one more time to Drivetrain, and particularly that screenshot I was showing, I've got a couple things here, right on the left. And if we just take a look at 1 month in particular, you can see here I've got that ramp time in months. Now this might change by sales rep, by department, by team. In fact, in this case in particular, I've got many teams, and they might all have slightly different ramp times depending on where they're at. I need to consider that it's not going to be the exact same ramp time for everyone. If I'm hiring a seasoned sales rep, it might be a little bit different than a kid straight out of college, right? So we need to take that into account, and that involves including their tenure. But I also need to look at this by my individual quotas for each region. Now, of course, it's going to be at the sales rep level, but my combination of my ramp, my quota, and then some form of assumption for attrition is what's going to lead to my overall quota capacity available. One thing you'll see here is if I take this quota and I back out the quota lost to attrition, this is what's giving me my quota capacity available. Now that's different than what I need. My quota capacity needed is dependent on my own goals. In this case, I can actually see in the individual formula here, I've done my new bookings target from a top-down perspective over my attainment. That would be these two right here. So this 600 over top of that, divided by that 80%, that's what's giving me this number right here. Since I now have the two, my quota capacity needed, my quota capacity available, I can now see if I'm in a surplus or a deficit. In this case, I have a pretty substantial deficit, about 500K, right? This leads me to my next section, which is calculations for new hires. If I know my average ARR per sales rep, and I know my quota capacity needed, and any sort of surplus or deficit I have, I can tell you how many new hires I need. And this will all be done by some sort of offset. If in January, right, I need 22 people, I better start hiring for that the year prior in June, July, something along those lines. So this year obviously gets customized customer by customer. But now when I take a look at something like this, I can say, well, this is, to Kristen's point, my base case. But let's just say I have that, aggressive case, right? And now when I build this in, I can just go to my aggressive case. I can switch over to it. And when I do, you can see by default, all of my formulas are taking the original approach of my base case. That's what it will default to. But if I decide that I want to change this a little bit and maybe go, this attrition is actually going to be 5%, how does that affect things? Well, now I can see in my new aggressive case that 5% flowing through with the knock-on effect to all the numbers. But I can also see that original base case. Now here is all very tabular, but then in the reports, I'm going to want to graphically show this. A line chart, bar chart, something along those lines that's showing me what is my aggressive case and how does it affect my quota capacity available or needed against my base case, and those two pieces together. So this here would be a bit more on the practical side, speaking to the theory that Christian is walking us through. Let us know if you have any questions in the chat there. Couple other helpful resources that we have for you here. We have a sales capacity planning for your SaaS business, how to develop a plan for faster growth, and also how to calculate your ramp up time. That is surprisingly complex and can change from customer to customer. Both of these here for you to give a little bit more help to that. Definitely reach out to us if you want that. And the other piece that I just want to call out here is this validate against budget and margin goals piece. Here, I know you've got a couple of thoughts on this, Christian. Could you share what you mean by each of these?
Yeah, so now that we've done we're done with calculating our scenario, essentially, we need to validate it, compare it to budgets and margins, and you may have a gap there, right? So it's not uncommon that you have to make some adjustments, some top-down adjustments. First thing is, pushing headcount back. That's usually the easiest way to do. Of course, you need to then be very careful about what that means in terms of delivery. Does it have revenue impact? And have a detailed discussion with the leadership team about necessary trade-offs. Very important that we don't under-invest in really understanding the impact of headcount on tactics and strategies. And also a mistake that I sometimes see people make is when they have to push back headcount, they start by pushing back headcount of support functions. Those are your functions that aren't directly generating revenue. So typically, if you're a software company, engineering, product management, and sales doesn't get touched. They get all their headcount, but then you push back customer success, support, customer support, etc. And then what can happen is that you run into issues later on, because if you are successful in driving revenue, there will be more need for those support functions. And so if you do that, do a thorough analysis of how much stretch do we have there, how much slack do we have there, how much more can we ask the support functions to do without increasing headcount at the end. And I made a point here in the last one in parentheses, ideally do this prioritization through driving alignment among the leadership team instead of asking the CEO to decide. That's because, ideally you want to present solutions rather than just problems, but also the department heads are closer to the day-to-day, they're closer to the realities. And it's not just that, it's also that you want to make sure that you have strong buy-in from your department heads, because they're the ones who then have to execute against this, who have to make do with the number of people they get. So if you can involve them in the decision-making process, you should definitely do that, because then they will be much more likely to support you in the ongoing reconciliation process between actuals and headcount.
Yeah, that's a really good point. And bringing the executive solutions rather than problems will always win favor, no doubt about it. Let's jump on to step 7 here, Christian, and on the scenario piece. This one, it sometimes feels like it's tripling the work, because now I got 3 scenarios to manage instead of 2. What's the best way to go about this so that it's still adding value without being sort of a time suck?
Yeah, that's a fair concern. But if you approach this systematically, it actually doesn't take a lot of time. Because look, for the aggressive scenario, often you can simply just take the existing bottom up that the department had shared with you. Most of the time, that's more headcount than what you have in your top down, simply because people want to be able to exceed their goals, and they want to do it, and they need more people to do that. The downside scenario can be the worst case, looking at attrition, backfill. You know that some roles may take longer to hire than others. There's probably a range. So you assume the worst case there. And the base case scenario should be aligned with the budget, should be make sense given historical rates. And that needs to be the alignment between the bottom up and the top down. So that's the result of all the discussions you have of comparing the two together. And if you approach it this way, it doesn't really take that much more time, I would argue, to create those three scenarios.
It's really good to hear because, on step 8 here, this monthly tracking of reforecasting, my question to you here is, why is it important to do it monthly? I mean, it seems like something, why monthly? Why not quarterly? Those sorts of questions I'm sure are lingering in people's minds. And what's the benefit to doing it that frequently as opposed to doing it, let's say, quarterly or semi-annually?
Yeah, so this depends on your complexity. If you're not hiring a lot, definitely quarterly might be fine. But the advantage of doing it monthly is that you are closer to what's happening. You're able to respond faster in case there are hiring delays or in case you're getting good signals from the market, and you may want to maybe advance a few hires as well because you don't want to get into a situation where later on it might be more difficult to hire certain roles. And if you just do it once a quarter, it can be hard to do it thoroughly because it just comes as a big exercise on top of your already full plate. But if you do spend a little bit of time every month doing that, then typically it feels less of a burden, it feels less of a workload, and you can do this properly.
No doubt. Yeah, what we're touching on here with the tracking reforecasting usually ends up somewhere in some sort of dashboard as well. The ability to see this visually and the impacts, the ability to sort of drill down into data. I'd like to quickly just take a look at what this could look like if you were to do it in sort of a reporting way within Drivetrain. Here you can see I've got a couple metrics that I'm tracking here: closing headcount, employee retention rate, any sort of headcount growth. The headcount walk that you were talking about, which we definitely would have done in models, but also want to show a little bit more visually appealingly within reports, I can see that here as well. And the unique piece about this is, this is all interactable. If I decide I want to leave a comment on this and call out a specific person and say, hey, this is looking high, right? I can give this to them and make it visible to everybody to see, or just the individual tagged users. Either way, when I send that to them, they're going to get a ping in Slack or Teams, Gmail, whatever makes sense for them to receive that. They can also review anything up here in terms of their comments active or resolved. More importantly, though, I want to see who these 3 people are. And so when I right click on this, I can show the underlying data. And for those 3 people, whoever the attrition was, which department they're in, any information that I want to show here. Of course, there's information masking too, but I'm able to do that. And that's true for each of these things. And most of you will probably know this, but the way this will work is you'll have opening headcount, you'll add in any new hires, back out any attrited headcount, and that will give you your closing headcount. Obviously, that closing headcount will be for the ending of August, will be the opening headcount for the following month, and the cycle continues. This is what creates that sort of walk, waterfall, or corkscrew calculation, depending on which region of the world you're coming in from. Now, I can see this monthly. If I want to review that quarterly as well, I can see that too by having sort of July, August, September, and then Q3, right? So on and so forth in Q4. Maybe I only want to see it quarterly as well. No problem, right? We can just break that down. The goal here is to get insights quickly, drill into that data, and see exactly what we want to see. And so whatever metrics you're hoping to drill into here, you're going to be able to get to that data, drill down by department, employee name, whatever makes sense, sort it if you wanted to by, let's just say, tallest to lowest or most to least when we're taking a look at those headcount metrics, and then have that sort of headcount waterfall be visualized here. Over this time frame that I'm looking at here, what was my opening new hires and headcount attrition? And similar to before, you'll always be able to arrive at that number here and then summarize the data in whatever makes sense, right? If I want to see this by department, I'll be able to see the count of those by department, no problem as well. Everything in here is exportable to Excel, so you should always be able to get that back to a system that's shareable amongst everybody. And even though Drivetrain is an enterprise-wide license, a lot of people still will work in Excel. There's no problem with that. You can export all of these. Most of the time, something like this will be shared externally. I would normally see them downloaded as a PDF, in which case it would come out looking something like this in the PDF. But more often than not, we see people actually scheduling the sending of these reports. Maybe they want to send it off to their individual team members right here, and then they give it some sort of subject and message. The question is, do I want to attach it as a PDF or embed it as an image with the text of my email? I've seen both be used. Then you just have to decide your recurrence. Is this a daily thing, in which case I decide the time? If it's weekly, what days? Is it Monday, Wednesday, Friday? And I don't like this team member, so I'm sending it out at 4 a.m. to them, right? Or is it a specific monthly view where every single month, let's just say every third Wednesday of the month, they're going to be receiving this report. That sort of automates this process. You have a calendar reminder for when it's sending out and these sorts of things. The goal here, though, like I said, get to answers quickly, tell a visually appealing story, and get eyes on it from various different departments, all of which is controlled for by permissioning and these sorts of things. So these visuals really speak to what Christian's talking about when he's saying the tracking piece. These tracking and reforecasting piece can be made quite nice as your actuals come into those reports, but you can still see the forecast as well. Let's take a quick look at another poll here. Thanks so much to the team for constantly putting up with these polls. Would you like to explore a demo of Drivetrain's headcount planning solution? We'd love to do it if you'd like to see it. We've done it a couple times. It's really good. We believe in how we do headcount and always open to your feedback on that as well. And then just overall, did you find this webinar a good use of your time? We'd like to hear from you guys. Anything we can do to make the webinar better? Really important for us. We incorporate that. We really take your comments seriously, and we just want to bring you good value to understanding of FP&A solutions, FP&A forecasting, and how we can do that a little bit better. So without further ado, let's just talk a little bit about this, planning your workforce accurately and flexibly. Here is some of Drivetrain's only badges from G2. We're currently the highest rated FP&A software on the market, but then some of the comments from our customers, as well as some of those logos, which you might know yourself. I've worked with both these people on the left here that you're seeing. They are true, I would say, Drivetrain fanatics, in that they've embraced the tool, they've learned how to use it. The ramp isn't high, obviously, because we are mimicking a lot of things that occur in Excel, DAX expressions, like if, and, or, min, max. All of these you shouldn't have to relearn. They're there for you. And so one thing we do want to call out here is that we're open to having a forecasting, reporting, and KPI workshop with you. And we'd love to show you how this would apply to your individual use case. Couple other items on helpful informational resources, right? These pieces will be posted in the chat as well. We'll also be sending out some stuff later. But if you would like any of these, right? How to forecast your ARR, forecasting in finance, and that sort of a comprehensive guide to that, or any headcount planning Excel templates, which we've created for you, you should definitely get a hold of that. And then lastly, we've got some additional resources here. We'll be sure to share these with you guys, but we do have our blogs, we have our cheat sheets. These webinars that you're seeing today, we've done a lot of those in the past. And so any of those that you're interested in, please reach out to us. We have all of them for you. So I'll pause there really quickly. We've got a couple minutes left here. I'm interested, are there any questions that we want to bring to the forefront here? Anything that we want to talk about in particular? Christian, I think I'll start with one for myself. How do we account for the delayed impact of development costs on revenue, especially when hiring doesn't boost revenue in the same year?
That's a great question. So you need to look at that from two perspectives, the accounting perspective and the planning / decision-making perspective. The accounting perspective I can't speak to because that relies on your local accounting rules. You need to be clear about how do I report revenue and expenses. But from a planning perspective, this is critical, right? This is where your ramp times come in and where you have to be very clear about, okay, if I'm hiring a new salesperson, how long does it take for them to be at 100% capacity? They may start to be at, maybe if you're hiring someone experienced, maybe at 50% capacity right from the start, but you need to include that in your revenue planning model. That's super, super important.
No, that's awesome. That's a great answer there. And when it comes to headcount, there's a variety of different ways to do it. We've showed a couple of them today. Do you have a favorite? Is there one that the Christian Wattig can point to and say, this is the best way I've seen headcount being laid out in terms of a reporting standard or maybe even a modeling standard?
I'm a big fan of driver-based headcount forecasting because it's not just that, for two reasons. One, if you do it driver-based, it's very easy for it to be a living, breathing document, because every time you reforecast, whether you do that on a monthly or quarterly basis, you can keep using that original driver-based plan and you just make adjustments. You get new news, you get new actuals, and by the ability to make those adjustments, then you can always tell the story of the business, linking back to that original forecast. And leaders love that, investors love that, because you have that continuity and everything is connected. And the other reason I like driver-based forecasting, especially for top-down purposes for finance, is that it forces you to really know the business, to get closer to your business partners, to learn more about what matters, how do the different departments function on a structural level. And getting that business know-how will make it much easier for you to be a better finance business partner, to be a better strategic partner to the business.
Oh, that's awesome. That's really good to hear. So putting on your forecasting hat, where do you see the future of headcount planning going? What will change? We've got this whole world of AI coming through. What is going to help us? Any hindrances you see, any obstacles that are going to come up? Are things going to become more simple, or are they going to become less simple?
Yeah, so the thing is, we're getting fantastic tools now. And if your headcount forecast currently is very manual, because maybe you have data quality issues, maybe sometimes internal movements don't get reflected fast on time, which I've seen happen sometimes. Those are all issues that should be gone soon if companies invest early enough into these tools, into these new technologies, and don't sleep on it. And I know it's hard because it's like changing the wheels on a running bus that runs at 100 miles an hour on the highway, because people are busy and it takes some time. But it's, from my experience, it's definitely worth the investment, because you eliminate all those pain points, and then you can forecast on what really moves the needle, which is business partnering, being closer to the business and helping leaders make better strategic decisions.
Oh, that's great. Well, Christian, I can speak for everybody here that we really appreciate your time. Guys, if you have any questions to either Christian or us at Drivetrain, feel free to reach out. You can see the contact there. Christian, any final thoughts before we call it this fine day?
I thought it was a fantastic discussion. Forecasting is one of my favorite topics to talk about. So thanks so much for having me today.
No problem at all. And we look forward to having you back again. This is our second time interacting with Christian. We look forward to many, many more. He is the FP&A prep master. And once again, he is the driving effort there at Wharton with their FP&A learnings and everything that comes with that. So thank you all for joining us today. We look forward to seeing you all again. If you want any of those resources, reach out to us. If you want to book a demo, you can see that there in the bottom right. Thank you all for joining, and have a